glad that you're here with us today. We're recording, so I'm going to be on my best behavior. That means no swearing, Deb.
Okay. I'll
do
see what
my
I can do.
And I was just mentioning to Deb that my most popular financial basics webinar. Where did the money go? How do you keep track of the money? How do you make more of it? What are the few numbers you track? If your books are a mess, how do you get them cleaned up? We're going to dig into the what, why, and how of becoming a good financial manager. All right, so that should be the reason why you're here. That you either want to become competent, support and love and tools, or you want to get better. That's another reason to be on the call. And then the third reason is you might know your asset from your elbow, but it's time to help people on your team or in your family also learn some financial basics. So that's really the intention behind why we're here. And while I've spoken on this topic a million times, I generally never say the same thing twice because I'm a wild card. And I'm learning all the time too, so I'll bring my experience and strength and hope to the party. And even better, I invite wonderful guests, people who are aligned with me philosophically, and I am happy to welcome to the program today, Ms. Deborah Frye.
Ending and bowing, and hello everyone.
Perfect. Yay, you. All right, well, let's get going. I've got some slides to help us stay a little bit on track, but it's also going to be a nice free-form opportunity to share. So if you have a question, type in your question. If I ask you guys questions, type in your answers. I know this stuff. I want to be of service to you and learn from you and help you. So the more engaged you are, the more you're going to get out of the program specific to what your needs are. So my encouragement, Deb's encouragement, is to make sure that you play with us. All right, so Deb, let's take a few minutes, and I'll interrupt you if we get a little too long-winded here, because you are a super accomplished person. But tell me the salient points of your story. You are actually a tradesperson. Oh, my goodness.
Absolutely. Turning wrenches as a little girl. My father did a lot of maintenance work and mostly after work, and he would drag me along to do some minor things, but I learned the trades that way through him. And actually, it was interesting to learn from the ground up, so I have that practical sense, if you will, to bring to the business. But as a business person, that's why we talk about pretzels to prices. I actually sold pretzels in Philadelphia after school and in the summer to make money, and had pretty good margins, as I recall.
Love it.
And absolutely, because I'm 5'0", and they give extra pretzels to little girls when you come in at 5 in the morning. So anyway, basically on the pricing side, you know, even when you have a little business like that, whether it's contracting or selling pretzels after school, you have to figure out your price and how to sell that and explain to the customer why that price might be a little higher than them actually going to the store to buy the, if you will, pretzels.
Well, and you're going to keep an eye on me today because you actually are a bean counter. You are an accountant.
Absolutely. So my career, I started out as a cost accountant all the way up to chief financial officer. But just because I'm formally trained to do the reconciliation, to determine what the profit and loss is, what a bean counter really does is exactly what it sounds like. You're very focused on matching things up and not really making any kind of correlation between the numbers in front of you and what they mean to the business. You're just trained to do that. And many times our CPAs, you know, I even relied on the CPA in multi-million-dollar businesses, and they never told me the path for the future or what to do to make more money or to control expenses. And so I hope that explains it. Just because you're formally trained doesn't necessarily mean what for a very short time, a few months, and I was doing a great job in my mind. I was calculating everything. I was telling him, whether his credit cards were matching the bank and all these things. And one day we were walking through the warehouse, and he turned and looked me right in the face, and he said, "Debbie, anybody can tell me the past. What I want you to do is tell me the future, what we need to do to control expenses and to grow sales. What do these numbers mean?" And out of that, I started doing projections, which are, budgets, but even further saying, okay, if we make this small adjustment, like we changed some of the sizes of the boxes we were shipping products in, which made a huge impact to the bottom line. But understanding your expenses, if I hadn't done that, I wouldn't have known that that was an issue, right? So we called that the crystal ball, because I was reading the crystal ball and trying to determine what changes we need to make and how the future was going to look financially based on that. And that's where we circle back to the prices. You have to watch your margins and all those different moving parts. And I love the way Ellen has boiled it down so the average person can understand it.
Well, I am just an average. I would say I would be below average when it comes to understanding this stuff. I don't even have the training and education that you do. I always figure if I can learn it, anybody can learn it, which is why I'm such a nut about sharing this information. And I am also a huge Profit Rhino fan. I was not really that fond of any pricing system. I thought they were all fine, or you could make your own. And Deb was really the one who reached out to me and said, "You seem to be pretty opinionated. Why don't you share with us what you hate about price books, what you like about the ones that people have made or customized that seem to work really well, what the techs want in your experience." So Deb, I felt so honored that you would ask my opinion, and even better, if you're going to ask it, actually use some of the suggestions that I made to offer different features and a simpler way to get the book up and running. I feel like I've had an impact on Profit Rhino, and it makes me feel great. So thank you. I love our relationship.
Absolutely, Ellen. And the people that you've brought to us, we have such a hand-in-hand process that we match the book to their business practices. Much like I explained to you in my little crystal ball, everybody does things a little differently. But what we really did was we made it very customer and technician centered, because those technicians suffer with a lot of stress in front of the customer. And we've now got the options down to between 30 and 60 seconds. They can give up to 6 options. So and it now works.
I think this is so exciting, and we're both here today. We're both here today to make sure that you make the money that you deserve. If you are a tradesperson, as I look down this list, I don't know everybody on the list. I think some of these folks are from your community, Deb. So welcome. If you've never heard me before, I'm going to share a little bit about my history and why I'm so excited to be here. But are you in the trades? Do you sell one of these marvelous services like electrical work, which is lightning wrangling, or plumbing, which you keep good water from bad water and prevent all kinds of disease, or HVAC guys create weather, for crying out loud. Thank goodness for the chimney sweeps who keep the air clean and keep us from burning down our houses. What kind of a business are you from? Go ahead and type it in so we can see a little bit. Jade's a plumbing company. I am married to a plumber. So let me tell you a little of my story. I am not a tradesperson. Deb, you're an electrician in addition to the 1,000,001 other things you've done, huh?
Right.
I don't have any of these skills, but I am a plumber's wife. Okay, you're married to a lightning wrangler. I had a girl, Alexa.
Ah, there you go.
We've met before, and I came to this industry with this appreciation of what these guys can do, and it was born when I first married my husband. I just love this picture. This is Hot Rod to the left. A long time ago. We are old now. When we first got married, we lived in this cabin, and this cabin was 11 by 15 feet, and the foundation was 4 rocks, and there was no water on these 10 acres up in northern Montana. And so we had $5,000 between us, and we got a well witch and a well driller, and a week later we had a $5,000 hole and no water and no money. So I was thinking I might have made a mistake with this whole adventure. And my husband, the plumber, said, well, that's not that big a deal. I know how to get water. I can figure this out. And we had solar collectors and rain systems, and we used to poach water. We used to steal it from other people's creeks. And lo and behold, he created a system at our house that actually felt like running water, even though we didn't have any. We had a lovely outhouse. What was born in that time was this appreciation, it always makes me messed up, of tradespeople. You know, people who are willing to manage electricity and weather and water and fire and gas, and what could go wrong, right, with all these explosive dynamic elements and particles. And I think you deserve to make a lot of money. If you are involved in any way in the trades, I am a big fan of dirty jobs. Now, the information that we're going to share today applies to any business. And since then, I've gone to work for Wells Fargo. I have all kinds of clients. One of my clients here is, via Wells Fargo, I help this martial arts company improve their business and their lives. And I've worked for Benjamin Franklin Plumbing. I started out as the wife of a plumber, and that's how I learned the respect and honor that business people deserve. But I nearly tanked the family business because I had no idea what I was doing. Now, I did go to college, and I graduated with a degree in business administration, but it was interesting. When I went to accounting classes, Deb, they showed us, things like LIFO, FIFO inventory, which to this day I have never used, or, how to book a stock and equity purchase of a business, which you would use an accountant for. So I did not learn one practical thing. What happened in my experience in college was that the accounting that we worked with, the sample forms, the example balance sheet and profit and loss that we used in accounting in college was assumed correct. In other words, the assumption was that the numbers we were looking at were right. It was never discussed that they could be wrong. And then as I jump into the family business, my husband's partner died unexpectedly and so sadly at age 33, and I ended up quitting my job and going to work for my husband. And I said, listen, I'll keep track of the money. How hard can it be? But what I inherited was a mess, and I didn't know how to fix it. And so, Deb, can you relate to that with the people you work with or in some of the situations you've been in?
Yeah, absolutely. Where, we'll have, a company that is $3-4 million a year gross. They're unaware of where the numbers are coming from, that things are not reconciled on the balance sheet. For example, back to the sales. So they have amounts in the bank, and they look at the bank statement, and they say, here's how much money I have, where that's not actually accurate. That's how much money you have today as a snapshot. And when we sit down and discuss what about your receivables, meaning the money coming on its way to the bank, and your payables and checks you wrote, so that's money coming out of the bank. So that's really your cash position. And what's happening many times, whether they're large or small, is the accountant brings a surprise every year. Did I make money or did I lose money? Raise your hand
if you've ever been surprised by your accountant, or go ahead and jot down surprise in the question box. Like, okay, you were profitable last year, yay. You owe this much in taxes, and you only have X number of dollars in your checking account, and you can't afford your taxes. Right? Ugh. So
many of them
thing is what we want to definitely avoid.
So many of them are on payment plans with the tax department because of those reasons.
Mhm.
And
so there is no judgment. No judgment here.
No.
Only love. We're not here to say, can you believe that? We're here to say, yeah, I can believe it. What do you do to fix this? How do you fix it? And why do we need to get a handle on it. So I'm going to cut you off sometimes, Deb, because I'm going to keep an eye on the clock. I want to share a certain amount of content. But know this, my friend, when the top of the hour comes, Deb and I are going to stay on the call for an extra 15, 20 minutes. If you ask a question, have a question, type it in at any time in the question box, and we may stop and address it right then, or we may wait until the top of the hour, and then it's a little less formal. We'll do Q&A, we'll open things up, very casual, really fun, and hopefully be of service to you specifically based on your question. One more thing I want to share from my experience that's had a big impact on my life and on this work that I'm sharing today is that one of the experiences I had is I was tapped to be the president of Benjamin Franklin, the Punctual Plumber, when they were first starting out. And with a group of venture capitalists, we went from 0 to 47 locations in under 2 years. Now, that was a rocket ride, I'll tell you, and I made a lot of mistakes, and I am grateful for the awesome people I worked with in that adventure, particularly some of the franchisees who taught me even more about the numbers, about the systems. But this is what I learned at Benjamin Franklin that applies for us today, is the simpler you make it, the further you can take it. The simpler you make everything at your company, the bigger you can go, the less stressful it is, the more fun it is. Just because you're getting big doesn't mean it has to get fancy. And in fact, with my larger clients, I fight fancy. It's like cleaning out the closet. I don't know why. Things give birth in the closet. Things give birth in the accounting system. I don't know where this stuff comes from. But what we have to do is weed it down to the truth and to the essential numbers that make all the difference at your company. So what I do day after day is look for ways to uncomplicate financials and business. And hopefully this day, our time together will help you to develop that philosophy, and that is very, very good for whatever dream you have as far as your company goes. So let me share a little bit about what we're going to do over the next 40, 45 minutes, plus question and answer time. We want to share from our journey, and already some of us may have some things in common. Electa and I are both married to the technicians. That's something that we have in common, and there are some interesting parallels from our stories to yours. So Deb and I are going to jump in and share from our experience as we go. Why it's important that you know. I once upon a time wanted so much to believe that if I do what I love, the money will follow. I think it's important to do what you love, but the money doesn't just follow. Money is like having a dog. Sometimes it's easy to take care of a dog. You could leave the dog in the car in the shade with some water for an hour or so, but the dog is going to need some attention on a regular basis. And money is like that. It needs your attention if it's your money. Otherwise, what Deb just described in terms of getting into trouble with the IRS or running out of cash or having all your money stuck in accounts receivable, these are the challenges that can just suck the life right out of you. And for me and my husband, the plumber, it almost wrecked our marriage, the stress of this. So, hey, Blaine, thanks for coming. And yes, we are going to record this. So that was just a reminder to let you know we are recording, and we'll see you later, but you can share this information far and wide with anybody you like. We want to make sure that you have a chance to review this. All right, so we're going to share why it's important to be a financial manager, what it is that a financial manager does. What are the actual tactical things that you would do to be a good financial manager? And we're going to dive into some of the how. Here's how you do it. Now, you still have to do all this. We can hold your coat here, but I am here to assure you, and Deb, I'm sure you will too, that you can do this, that this is a course of study, but it's not an endless course of study, and it isn't all that difficult, not compared to some of the other things you're already doing in your world. Then at the end of the program, I've got a gift that I want to share with you, and we'll let you know how to get it. All right, so Deb, let's find out a little bit about our crowd here, okay? So we're going to do a little survey, and you're going to use the question box to answer the question. if you would, tell me you're financial savvy. So when it comes to the numbers, jot down in the question box where you would rank yourself in terms of your financial savvy. A 1 is, I do not know what you're talking about already, and I'm a newbie at this. And a 5 is, I'm good at this. I review my balance sheet, profit and loss regularly. I understand where the money is and where it goes. Let me know where you would rank yourself. Okay, at 3.5. Oh, hi. Oh, Justin, I would give you more than that. Justin's like 100 times smarter than me. I know it. I'm glad you're here. Okay, so look at this. Oh, this is perfect. Eric has a 4.265 divided by a 10 plus. I'm going to say he's pretty smart. I already don't understand his math. Here,
well,
2.5.
He's saying, Ellen, he's telling you 4.265. He's got to start rounding. And then 10 plus is the number of trucks. I think he's telling.
Oh, isn't it?
Or employees.
I thought 10 plus is the number of trucks. Is that right, Eric? I thought he was giving me like a fancy pants, smart alecky answer to the first question, which I guess he still is. Okay, at 3.
To some degree.
Okay, 10 plus employees. Okay, sounds good.
There
So,
you go.
Eric, let me address you specifically for a moment. So as I share this information, my hearty encouragement for you is to continue to educate your team and family members on stuff rich people know. And rich people know how to read a balance sheet and a profit and loss. And absolutely, do you want to grow to be more than 10 employees? There's no right answer or wrong answer here. You can do whatever you want in life. But if you want to get to 20 or 30, you can't do it by working twice as hard. You're going to need to get team members in on the game and develop them as leaders, right? And one way you can do that is to expand their financial literacy. Does that make sense? So for those of you who are fairly savvy and who have already grown their companies with all acknowledgement of the success that you have already achieved, my encouragement is the key to getting even bigger is simplifying these systems and getting the team in on the game. So Bruce, Brian, most companies don't get past 3 trucks because that's the point at which you really do have to develop some managerial skills to take it to the 5th, 6th, 7th truck. So congratulations on that. And for those of you who want to work all by yourself, you can do that and still make a ton of money. My encouragement is that you and your maybe part-time subcontracted bookkeeper work together to gain enough financial understanding that you know where the money goes and how to make more of it. So as we have a mix here from 2.5 to 4.265, I will do my best in a group setting to make this information amenable, or available, accessible to you and useful to you.
Right.
All right. And then anybody else want to comment on the size of their company or their score before I press on? That gives me a good idea. We got a range. All right, now we're going to get into a little bit of the why you need to know and why your team should know the score. And that's all really financial literacy is. Now, the dangers of not knowing, the most common call I get in my life, Deb, is I'm not making enough money. My wife and I, or my husband and I, want to kill each other. I wish I could pay my guys more. Mostly what I hear is a desperate reach for help based on a lack of profitability in cash. What do you think of that, Deb?
Absolutely. That's the number one killer. Most of these folks are working member, if not their wife or husband, the children are involved in the business, and it's starting to affect affect their family and cause problems. But it's typically the issue is that they haven't really sat down and decided as a company what they need to make a decent profit to have all those goals fulfilled. Does that make sense?
It makes great sense, and I love what you said. They haven't sat down and decided what they want. It's so easy to get on the treadmill and just do it, as Michael Gerber says, doing it,
Yep.
not really step off the treadmill long enough to say, is this what I want? Could I go get a job? Could I do something else? What if I quintupled my prices and went out of business, but at least I started to make more money? That is exactly my story. You know what? I'll raise my prices 500%. That'll never work, and then I can go get another job because this stinks. And all that happened is we made more money. Okay, so it's the most common call I get, and it tends to affect relationships. It can affect your sleep and your health. You may be struggling with resistance and fear from your team members. We're going to raise our prices again. We're going to charge $300, $400 an hour. Gulp.
All right.
And their self-esteem may be such that they worth it. Or they may not trust you in terms of, well, why? You only pay me $25, $30 an hour. How come we're charging $300 an hour? The sharing of financial information, open book management, getting your team in on the game, of almost 30 years of being in this industry, of doing it myself and also encouraging other companies to do it, I don't have a single bad story to tell you about that. I don't have a single disaster story to tell you about a company who opened the books up to their team. So my encouragement is that knowing and sharing can really make all the difference. Otherwise, the frustration, the poor decisions, this is what we did before I pulled my head out, as my mentor asked me to do. Before Frank Blau told me where my head was, I would call my competitors, ask them how much they charge, and charge a little bit less. And you can see on the screen how heartbreaking this particular picture is. My heart goes out to a guy who puts a billboard out with this message. So we follow the blind, and we can go right off the cliff like so many of our competitors, right? So what instead? Let's look at, the why, the benefits of knowing. I just want to tell a brief story about this guy. His name is J.R. Richardson. I met him. He is a Benjamin Franklin plumber, among many other businesses he owns. Right now, this guy, and when I met this guy, he was on the bounce back, but he and his wife had been so poor that they put their kids' lunch money in envelopes at the beginning of the week so they could make sure that the kids would get lunch. JR and his amazing wife, Carissa, who's the president of their contracting company, right now they're tracking about $80 million, and they have a $1 billion business plan. It's with a B. He's a long-term thinker. He's a planner, and he knows his numbers. And so whatever you want to be, whatever picture you paint of what it is that you want, allow yourself to put the numbers on it. How many trucks? How much profit? How much cash? What do you want your net worth to be? The benefits of knowing where you are and then being willing to ask for more. Document what it is you want. That gap between where you are and where you want to be is this delicious journey. And we're going to give you some tools to help you really embrace it. No bad thing, comes from knowing where the money is and where it goes. And what I would suggest is if it is your company, you cannot delegate it. You can delegate some bookkeeping, but it is your responsibility to know the numbers and the money. And then as that leader, to get your team in on the game. So here's what financial managers do. So we talked a little bit about why to do this, and I hope that you're sold on the concept of being good at the financials. Well, what does that mean? What does the financial manager do? So I'm going to go through this and define some terms. A financial manager is responsible for getting the company to a known financial position. That's what I call it, and I'll refer to it as KFP. And KFP means that the financials, and when I say financials, I mean primarily, almost exclusively, these are the biggies, the balance sheet and the profit and loss. Any other report is a subset or a slice of or a compilation of certain numbers. They're subsets of these two main reports, the balance sheet and the profit and loss.
And Ellen, just jumping in on that, I want to really emphasize for everybody in the webinar that you really want to look at your balance sheet and your profit and loss. So not just your profit and loss. Many people don't look at their balance sheet.
is usually a little more popular, and the balance sheet can be a little more intimidating.
Right.
Yeah, and then
but you're going to make it simple.
There's another report called the Statement of Cash Flows, but it's really another subset. It is showing you why cash doesn't match profits. Can be useful, but it's a derivative report from the balance sheet and the profit and loss. The balance sheet and the profit and loss need to be current, which means up to date. They've got to be right. And here's the kicker. You have to understand them. It's a course of study. It's not going to happen over the next 20 minutes if you're not there, but I want you to know when you are there. You're operating at a known financial position when the books are current, accurate, and understood, and my standard is weekly. Once a week, the balance sheet and the profit and loss. Sometimes in an accounting program, they call the profit and loss your income statement. It's like an elbow or a 90. Same thing, two different terms. In accounting, there's a lot of that, which is one of the reasons I felt stupid in accounting. There's a language. So understood is the key word here. What is the glossary of weird accounting terms? You know, that I've written a glossary. You can find it on my website of, you know, what does depreciation mean? These words are weird. It's going to take you more than 20 minutes to learn this. However, between now and the end of the year, you could move from an utter mess to a known financial position if you committed to it. All right, and this is the goal. The end of the year is a great time to get caught up. If you're a mess right now, jot that down as your goal. That I'm going to clean this year up by the end of the year. And when the year ends, and as I get ready for tax season, I'm going to use that moment to get 2016 rockin' right, and 2017 is going to be pristine. Okay, that would be an excellent goal if you're not there. But the standard is weekly. So, for instance, Eric, I don't recommend that you interrupt your bookkeeper every time you have a question about the financials. What is to have a weekly formal meeting to discuss the financials, and for that meeting, the balance sheet and the profit and loss have to be current and accurate. Now, throughout the month, now we still haven't done the month-end close, which is next. You're going to add an element of accuracy once a month when you close the previous month. You do the bank recs, etc. But once a week, to have presented to you the balance sheet, the profit and loss, and some key numbers that you're going to manage off of is good financial management. So for Eric, absolutely at your company, but even for some of the smaller companies, Electa, instead of hounding your husband, this is what I used to do, you probably don't, but when my husband would walk in the door, I would go, have you got a check from the Fernwickies? What about this? Did you find out, what did we write this check for? What if you save the questions, if you can, for the meeting? And then be ready to talk about all things financials once a week. Even in a small company, the formality of that can be relationship saving. Right? Let's talk about it at the meeting. Bring your questions at the meeting. On the flip side, you don't have to call your bookkeeper at 10 p.m. to find out what's in the checking account. Be respectful. Don't make an emergency out of a non-emergency. Once a week, meet. Now, if somebody bounces a check for 25 grand, I don't care what size company you have, that can't wait for the meeting. You got to interrupt. But if we formalize our processes, this is what responsible and good financial managers do. So once a week, the financials are up to speed. You do whatever you need to do between now and when you can say, yes, we're at KFP to make that happen. I'll give you some suggestions. Once a week, you're going to meet and review the financials with a tool I'm going to give away. That's my gift today, called the Financial Quick Check, and we'll break it down in just a moment. Once a month, you're going to close the books with your bookkeeper, with perhaps some additional help from your CPA. And then as you get to a known financial position and you engage these systems, I am here to share this will only take you minutes a week. No more than an hour a week to maintain. So if you're thinking, oh, I don't have time to do this, well, gut up and get the big projects done to get your books to write. And beyond that, maintaining the system, small company or large company, as the financial manager, there's not that much to do. Isn't that delicious? Let's uncomplicate this. All right, so let's look at the balance sheet. I'm going to dig into some definitions now. This is what you want to bring up to speed. To get to known financial position, the balance sheet should be rockin' right. Now, what's the balance sheet? It is based on an equation that was discovered by a monk in the 1400s in Italia, and Padre Pacioli discovered, or I guess aligned this equation: assets equals liabilities plus equity. The point is, this has not changed one jot since the 1400s. And it's the same in any country, in any dollar, in any business across the globe. And Deb, notice how Deb interrupted to say, Ellen, make sure they understand the balance sheet. The balance sheet is the senior scorecard, because it tells you what you have, that's your assets. What you owe, that's your liabilities. And then equity is what you own. So your assets are what you have. It's your stuff, and it's all verifiable. To get it right, well, cash. The cash amount is a negative $450 on your balance sheet. Now, you know that's wrong, so where would you go to find out? I would go to the bank, and if the bank probably has better records than you do for the time being, use their number and get there. All right, so you can verify these. What do we have for inventory? Well, you count it. What do we have in accounts receivable? Well, there should be a stack somewhere of bills that have been given to the customer for work done that haven't yet been paid. So all of the things under the assets column can be proven out, and that's what it takes to get to a known financial position. And you, as the financial manager, use a ruler or your finger, and you go line by line, and you ask questions. Is it right? Is it wrong? Liabilities and equity, by virtue of the equation, they are claims on the assets. Here are the assets. Well, where'd they come from? Well, I've got a truck. Yay! Where'd the truck come from? I borrowed money from Ford Motor Credit. So we'll have the asset of the truck, and then we'll have the liability of the truck loan. Or we run out of cash, so the owner puts cash into the business. Awesome. Nobody wants to do that, but you can do that. Cash goes up, assets goes up, and then a line item in equity goes up that says paid in capital. So the equation stays in balance and is essentially always showing us what do we have and how did it get there, or who lays claim to it. And you can make decisions based on what information you're going to get here. If you have less cash than you have in liabilities, you're in trouble. Wouldn't it be good to know? And how could we fix it? Well, we'll address that in the next couple of slides. Because in the game of business, what we want to do is get more assets, grow our assets, not lose our assets. That's what Warren Buffett says. Grow assets. Protect the assets and grow the assets. Get more stuff. And there's only 3 ways to do that. There's maybe 4, but let's look at the 3 ways. Okay, let's go back up to this one. So to get assets to get bigger, one way is to incur liabilities. Buy a truck and get a truck loan. Assets go up, liabilities go up. Or put money in the company yourself, or go on Shark Tank and get an owner infusion. Assets go up, you get a check for $1 million. Equity goes up. Barbara Corcoran wants her money back when she invests in your company, but it'll be recorded as owner investment. Fair enough? Now, the third way to grow your company involves the profit and loss, or the income statement. When we charge more than it costs for stuff, we create a profit. Now, you're probably familiar with the profit and loss. Like, Deb, you were saying, do most of your clients look at the profit and loss?
Absolutely. They look at it. They're not, and even that is sort of a surprise, but that's the common factor, that they will all say that they understand profit and loss. They understand why they sold, say, X number of dollars of sewer repair, but they don't understand 2 things. One is the balance sheet and how it relates, what you just explained beautifully,
Thank you.
The profit and the profit, why it swings from one month to the next, and things like that. And
Okay.
there are common reasons for that, like expenses booked in one month and the sale is in another, but little things that you can track down. But they are usually pretty knowledgeable about their profit and loss statement. But where they get lost in the weeds is the balance sheet.
The profit and loss are connected, and the third way to grow assets is to get profitable. Now, if you get nothing out of this class, or if the one thing that you teach to your kid or to your service manager or your field supervisor from this class is this: if you charge more than it costs, you manufacture a profit. You make money. It wasn't there and you made it. And you can choose how much to charge and what your expenses are. You can control this. And if you make money, this profit shows up on the balance sheet in the equity section. In QuickBooks, it's called net income. I don't know why it doesn't just say profit. That would be easier. But it's called net income in QuickBooks, just to confuse you, I think. But there is a net income line in the equity section of the balance sheet that matches the net income line at the bottom of the profit and loss. And if that number goes up, by law of equation, assets have to go up. This is good news. When we have more assets, what could we do with them? We could pay bonuses to our team. We could buy new trucks, right? We could buy another company and create more opportunities for the team. Because if sales minus cost is a negative number, it's called a loss. And if we lose money, here's the thing: if you lose money after a time, if you lose money, assets go down. And after a time, the only way to keep the company going is to go into debt. You can't chronically lose money and not increase debt. It's mathematically impossible. Either that or the owner just keeps putting more money in, but even the investors want that money back out. So the third way and best way to grow assets is to charge more than it costs for stuff and create a profit. And then you and your team can decide what to do for that profit, but it is a good idea to leave some of it in the company for the stuff happens moment. And you can communicate that to the team, that's why we want to operate at a very profitable level. And when you do that, the fourth way that you could grow assets is you could create a cash machine, a company that creates profits and cash every month. And someone may want to buy that company for more than it's even worth for the future promise of profits and cash. And when you do that, that's the fourth way you can grow your assets. And most people are never going to see that opportunity, but you could change that and create a really profitable company that you could keep or sell. And as you keep score and get your arms around these simple financial statements, this is how you'll know what your options are. And then you won't be calling me, or your team member won't call me if he goes out and starts his own business and he's miserable and he's got $150,000 in debt and his wife is just at her wit's end. This is what I'm trying. For me, none of the great decisions I made in my life came from the promise of something great. They usually came from the pain of the current condition. So wherever you are is okay. Absolutely. It could get better. I'm taking that back. Now in my life, I am at a point where I don't think I could get scared anymore because I know how this works. I could make my own money. Isn't that the most liberating thing? So as I share that, and Deb, you're like that too. Somebody called you a Midas, right?
Yes, the Midas lady, because my contracting businesses made between 24 net and 29% net, but it was because we watched what made us the most margin, and we focused in on that, and we didn't worry about the bunny hole with the competitors where they would do the 1995 drain cleaning and nonsense like that. There is no such thing as a loss leader. It's a loss.
It's a loss leader. You can call it a loss leader, and you might even decide to use one, but don't be fooled about what it is, right?
Yeah, because you're, just rolling the tires is going to cost you more than what those specials are, if you will. It's
Mhm.
we were available and we had very high quality service, and some people just didn't use us. But better to have profitable growth like you're talking about, because you grow your assets without growing your liabilities, which is
I have a
huge.
friend who went to the Wharton School of Business, and he said that, I love, like, what's one thing you learned there after 4 years of being at Wharton? He said absolutely the one thing he learned there is premium product, premium price.
Right.
Premium product, premium price. You can't compete with Walmart. You can't compete with that $75 any drain guy
No.
on price. So could you get better? Yes. And so you're going to have to learn more about business than the financial piece. But the score, what's cool about knowing the score is then whatever you choose to do with marketing, sales, operations, the evidence of whether or not it worked is going to be in the scorecard, which brings the emotion down. Right? Let's try something else. Let's do something else. It's just a game. So what's holding you back? If you're not operating at a known financial position, let's focus on the financials for just a minute here. If you're not operating at a known financial position, if you don't have this weekly meeting, if you don't understand your scorecards, what gets in the way? Consider some of these things. The mess was there when I got here. If you hear that from your bookkeeper, you've got to get blame and judgment and all that out of the way. I don't care how it got there. That, to me, I don't want to hear one word about that. It doesn't matter. Trust them. Have them trust you. This is going to be a safe place. What you can't say is it can't be done. Like, it is doable to fix it. You go and verify what your assets are, what your liabilities are, and the difference is equity. And you can, in every situation in any company across the globe, fix it. So get blame out of the way. Another thing that can hold you back, particularly as you get bigger or want to get bigger, is someone's going to tell you to delegate the bookkeeping. Great. And pay attention to the bookkeeper. Deb, you ever hear of anyone being ripped off by their bookkeeper?
Oh my God, yes. What happens is we put all kinds of.
That's awful. I'm laughing.
I know it is. It is an awful feeling and realization, because many times we're very close to that bookkeeper because they work together, their family and this and that. But just like you spoke on the technician thinking about the $30 an hour to $300 an hour, that bookkeeper is also looking as you're growing to those numbers, and maybe they have financial problems, and people are they do some desperate things in desperate times. But when you know your numbers, I always say, people lie, but numbers don't, okay? So if you know your numbers, you know your margins, you know your known position, you're going to see that. It's not going to be a surprise. You're not going to be on the front page of Google or the newspaper, bookkeeper takes hundreds of thousands of dollars. You see that even with non-for-profits. Well, how that happened is somebody let go of the wheel.
Right. They let go of the wheel. That's exactly it. And I know really awesome people who've done really dumb things because they had access and the boss wasn't looking. And very often it has to do with addiction, a gambling addiction, a drug addiction, a shopping addiction. That is the disease of our time. And if you give them access and you don't pay attention, again, it's only going to take minutes a week to pay attention. But if you're not paying attention, they will find the opportunity. If you are paying attention, they won't do it. You'll protect them from that dumb mistake, or at least not where you're concerned. And you might
also,
have
one other thing to jump in, Ellen, is one of the other rules, if I don't bring anything else to the table, if you have someone who isn't supposed to write checks, for example, or transfer funds, get them view-only access to the bank. There's no reason for them to have that access if they don't absolutely need it.
Well, as we look at that, if you're paying attention, one of the other tools, we're going to share the financial quick check today, and we're not going to be able to dive into everything that you could do as a financial manager, but we're going to give you a lot of the hows and the basics here. The month-end close is a good place to impose those checks and balances. For instance, as the owner, you might do the bank reconciliation. If the date has been entered, it doesn't take but minutes to do it. Or you might open the mail. the mail is so often a spot, or go look in the accounting and the bank statement and the credit card statements on a, just log in and see the action, eyeball it. If you're just paying attention, you're going to catch weird things that don't look right. And if you look once a week and you occasionally pop your head in there and once a month you close the books, it makes getting ripped off a lot less likely. Now, kissing frogs, you might have to kiss a few frogs. Your bookkeeper may not, sometimes, I don't know why, they just get threatened. They don't want to change. Their desk is, a mess. They're behind to 2008. They might have to go. But if you take away the blame and you get shoulder to shoulder and you make it a safe place for them to learn, you may be able to work through the resistance and the fear that your bookkeeper may have to help you get good. And if you're working all by yourself, that's what I did. I couldn't afford a bookkeeper when we were that small and that broke. And because I didn't have someone to help me, I had to learn it, and I'm so glad I did. Then when I hired a bookkeeper, I will not be bamboozled. There's nothing that's going to intimidate me anymore. So no matter where you are and what kind of bean team you have assembled, you can still fix it. It is your money. So take responsibility. Failure to take responsibility is the number one reason why you might not be operating with the highest financial power. It took me about a year to get good at this. A year, 11 months of which I was whining and telling anyone who would listen to me, oh, what a pill I used to be, why I didn't want to do it, I'm too creative, I'm too dyslexic, all that stuff. It probably would have taken me a lot less than a year. So that's why I say with all confidence between now and at the end of the year, you could be operating at a known financial position. So how do you know? Okay, how do we know we're at a known financial position? You're going to go line by line down your balance sheet and your profit and loss. I take a ruler and I ask questions. People have paid me tens of thousands of dollars to do this. This is what I do. Wait to be dazzled here. I take a ruler and I say, okay, cash. Is that right? Do we have $49,855 in cash? Does anybody know? And if they say yes, I reconciled the bank statement through the end of the month. I checked the cash balance yesterday between the checks that are outstanding and the deposits that are outstanding. That is rockin' right. I put a smiley face next to it. If they don't know, I put a question mark. If I know it's wrong, I put a frowny face. That is how sophisticated my auditing process is. Line by line. And I ask questions. What's prepaid expense? What's in there? How long has it been in there? What happens to it? How's it supposed to work? You go line by line and you demystify this and you make sure it's right. This is how you do it. Now you're going to have to assemble a good bean team. And I will make a suggestion that I like someone who's tidy. I had Gail, this is my sister and my bookkeeper, and she is the world's greatest forensic accounting. I have made a million messes that she's gotten me cleaned up out of, and she's helped a lot of people and clients. But I said, Gail, open your drawer and I'll take a picture of it. Even her drawer is tidy. You want tidy in a bookkeeper. You want someone who likes numbers, maybe a Virgo, right? Someone who is particular, like Sudoku, likes crossword puzzles. There are people who love this. Find that person. Gail is not a CPA, doesn't have a college degree, and she's the best one I've ever met. Now, Deb, you have a good tip for finding a great bean counter.
Absolutely. What I've read years ago, and I've always done it, is after the interview, I always follow the person to the car and say my goodbyes at their car, because a person who keeps a disorganized car has a disorganized mind. Okay, so they're not going to keep your books very clean and organized either. So if that's one indication when you're interviewing, just a little tip.
It's a great tip. And sometimes that person can be a little bit, I want to use a bad word here, they can nag because they like it right. That is not a reason to fire bookkeeper. That's a lovely attribute. Take it like a duck. They have to be compliant. They have to be polite. And sometimes they may need some help with their people skills. But I like it when they're annoyed when someone doesn't bring a receipt in. That is a good indicator of a bookkeeper. And the bookkeeper is going to help you with day-to-day data entry, and your CPA is only responsible for keeping you in compliance so that you stay out of the pokey and developing a reasonable tax strategy. Your job as the financial manager is to set financial goals, is to come up with a selling price, is to understand the numbers and use that information to make better, faster decisions. These people, your bean team, your bookkeeper and your CPA, are your support team, but they don't replace you. You don't find a good accountant and delegate to them. You use an accountant to assure that you're in compliance and your tax strategy is sound, and your bookkeeper helps you get to and maintain a sound, solid financial position, get the KFP. So that's what to do. Now, another tool for how to do it is to use the financial quick check. And, we're narrowing in on the top of the hour, so I want to make sure I give you this. This is a lovely dashboard report. If you put your nose right up to the screen, you can see a sample one. I'm going to give you one. If you go to I'm going to type it into the answer box. Deb, would you do that for me? Would you type into the question box and the chat box www.ellenrohr.com/Rhino. ellenrohr.com/Rhino. If you go there, put your name and email address, you're now on my email list. Thank you very much. You can always get off of it. But before you do, download the financial quick check and then the meeting instructions. That once a week meeting can be nicely grounded by looking at a dashboard report or a one-page report. And the one-page report allows you and your team to focus on a few numbers. So in this particular report, I'm just going to describe it. You'll be able to pull up the document on your own. I know the webinar doesn't really lend itself to study of this, so let me just introduce it. The first column is week by week by week. We're going to look at the months developed. What do we have in sales and expenses and profit, I hope, compared to budget, which is the second column, where we are compared to where we want to be. And you're going to measure your progress. Are we getting closer to budget? Then you might look at the year-to-date compared to last year, or what I like to look at is compared to where I should be according to the budget this year. Then I've also got a little statement of cash flow at the bottom of this page. What do you have in cash and checking and savings? What do you have in accounts receivable? And match that to accounts payable, or maybe even to current liabilities. This is just an Excel spreadsheet. You can take the protection off. There's no password. Get a 15-year-old to help you customize it to your chart of accounts. And you can use or customize this report as the centerpiece of that weekly financial meeting. So what I have on the, let me get back to this. What I have on the download is the Excel form itself, and then meeting agenda and instructions on how to fill out the form and why, what kind of information it tells you. So I think you're going to love my little giveaway. All right, so you as the financial manager, what you would do is attend and hold your bookkeeper accountable to that financial quick check meeting and start to invite your service manager, your field supervisors, your key people at your company so that they can get a lovely and appropriate look at the big rock numbers of sales, labor, materials, overhead in dollars and percentages compared to budget, what the cash position is. Do that every week. Once a week, close the month and make sure it's rocking right. You didn't miss anything. You went through your bank recs. Everything's hunky-dory. Once a quarter, review your budget. Look at what's happening with taxes. Are we paid in? Are we good? Are we in compliance? Do we need to raise our prices? In Profit Rhino, all you got to do is raise your prices through the price book, easy peasy. Check your goals. All of this takes minutes a week. ultimately, and it's the topic of another webinar that we may have at some point, ultimately where you are is your starting point, and where you want to be is your budget. Nobody likes to budget, but I like to think of budgeting as a way to set goals and come up with a selling price. And my buddy Frank Blau is the one who taught me how to put a budget together and come up with a selling price. And as you crunch those numbers, then this is why Deb and I love each other. A good pricing tool is such an easy and effective way to get those new prices implemented in short order. And now, Deb, we're really running out of time. Maybe let's just hear. So right now, what I want to say is we promised you we would give you an hour of content. Hopefully this has been an hour well spent. Deb and I are going to stay on the call. You're welcome to say, I only budgeted an hour today. I'm going to see you. Bye. We're going to continue to record this call, so if you want to listen to the next portion via recording, you can. But now is the time you could get up and leave the meeting, and it wouldn't be impolite what one did. So thank you for coming. Deb, I'd like for you and I.
Yes, everybody. Thank you so much for your time.
Yeah, thanks for coming, and it's so fun. And we're going to stay on. Before we jump into, other questions, do jot your questions in the field. If you're still on and you plan to stay for a few minutes, jot your question in the question box. And as folks do that, thanks, Susie B. As folks do that, let's give our best tip for raising prices. So, Deb, you start. Like, okay, you're going to raise your prices. I asked Deb yesterday when we were preparing. I said, Deb, have you ever recommended that someone lower their prices? And what did you tell me?
First, I went blank, and then I said, no, I never did.
No.
The very first thing you have to do is put your blinders on and don't worry about the competition. Then,
great tip.
Sit down and think about where you really want to be. Like right now, maybe you're just getting by and just paying the bills you already have, but you need to sit down with just a pen and a paper and say, okay, if I paid Joe another $5 an hour, or if I could give him $100 a month bonus, what am I going to have to charge per hour to pick that up based on the number of calls I get on average in a month? It's that simple. Once you determine what that is, and again, in your Profit Rhino book, you can do that in less than 2 minutes.
So good. I love that. And putting the blinders on. I don't know why that huge company who seems to be very successful in my market area is running 50 trucks and they charge a third of what I do. I don't know how they do it. Maybe he won the lottery. Maybe his dad was really rich. I don't know. And it's outside my hula hoop. I can't, what? Is it, maybe he's in debt up to his eyeballs. We don't know. And you can't impact the other guy, but you can change you. I would say one other thought, and I've developed this over time. When Frank, my mentor, was dragging me through this process, what he did is he sat me down and we put a budget together. And he said, don't write down what you're currently spending. Write down what you want to spend. What do you want for a salary?
Right.
What does Hot Rod, my husband, what does he want? What do you want to pay your guys? What kind of uniforms? So you have piece of crap uniforms now. Don't put that number in your budget. Put in what it would take to get nice uniforms for your guys, and so on and so on and so on. And he had me add up that whole list of costs and divide it by the number of billable hours I could possibly have. And he said, that's your break even per labor hour for just the overhead. And then he had me at for just the overhead and the labor. You haven't even made any profit yet. Now inflate it for profit. And for me, I had to go through that process to believe him because I am a fairly smart chick. I mean, I'm self-deprecating sometimes, but I'm smart enough, and I didn't understand why someone else could be charging less and he seemed to be successful. And he told me just what you told me, Deb. Ignore him. Now, what about you? So I went through that process and I came up with a selling price. But you know, I've worked with clients over the years since then, and some of them just say this, well, what do you think I should do? I said, well, I want you to raise your prices. You could go through the math and figure out how much, or right now you're operating at a minus 10% profit. What if you just raised your prices by 30%. If nothing else changed, if none of your expenses changed, you'd go from a positive 20. Would that be better? You know, don't make this more complicated than it needs to be. So the worst thing that could happen is that you go out of business because no one will call you, which I don't find. I find people go out of business because they're priced too low, way more often than if they're priced too high. And if you are going to raise your prices, you're going to have to use a nice price book. You're going to have to be clean, sober, on time, dressed right. You're going to have to improve. Fair enough? And the worst thing is not necessarily going out of business. The worst thing is for you to stay in business and watch this debt rack up to $200, $300, $1 million in debt. So if you do want to ask questions, thanks, Justin, for the love. That was really sweet. Let's see what we've got. How much would you suggest raising your prices per year to stay ahead of the game? Okay, and I see that Debbie answered the question. First, figure out what your break-even number is. I can't get on there. Hey, Eric, I'm going to try and open up the line. Would you be okay talking to us? Because I'm not seeing I think this would be a little easier and less awkward if we could chat. So I know you can hear me. Can I hear you? Let's hear you talk. Oh, I can't hear you. And that's okay. We're going to do it the old-fashioned way. We're just going to use the chat. So, Deb, what did you suggest to Eric? Deb, can you hear me? Hello? Hey, Debbie? Oh, no. Hello, Deb. Can you hear me? Hello? Hey, Deb? Let me try someone else. Who's on the phone? Alexa, I'm going to unmute you. Can you hear me now? Can I hear you? I can hear you.
Hi, Ellen. It's Alexa. How are you?
I am good. I love it that you are a lightning wrangler. I can't hear Deb anymore, but could you hear me?
I can hear you just fine.
Okay. I don't know. I think we might have just had like a wrinkle in the force.
I have no idea.
I have no idea. Darn it. Because we were having fun. I can see. Let's see.
Yeah.
How much would you suggest raising prices? I can still hear you. Okay. I want to address Eric, but I'm not sure if Eric can hear me. Eric, you can still hear me? I can't hear Deb, but I'm going to go and jump in on this until Deb gets back on as far as the connection goes. Eric, there is a quote I like, and it goes like this. I am indeed rich, since my income is superior to my expense, and my expense is equal to my wishes. So again, I never talk to my clients about what the market will bear. I figure the market bears all kinds of things. That's why you can buy a Timex watch for $10 and a Rolex watch for $50,000, and the Rolex doesn't even keep very good time, right? What the market will bear is this unuseful thing that I learned in college. And what it does is it binds you to this what Deb was saying about going down the bunny hole with people who don't know what they're doing. So my question to you would be, what do you want? And as you look to your future, Eric, and you say, I want to be a 20 truck company. I want to have 2 locations. I want to buy a building. I know I need to replace X number of trucks. You put your budget together for what those expenses would be and how many trucks you might have. And now you have some goals and a justification for a selling price strategy, or you raise your prices 20% to have that 20% drop to the bottom line so that you can buy more of what you want, get more assets, and spend more on what you want. So what it takes to make sure that you can get to a yes is, in addition to becoming a great financial manager, Eric, you take the courses on marketing, on sales, on operations so that you can run streamlined. You get your team in on the game so that every step of the way your customers will say, oh, they charge more, but they're so worth it. And in your market area, let me ask you one more question, Eric. In your market area, is there someone who charges more than you do? Let's hear this back from Eric. Does somebody in your market area charge more, or seem to appear to charge more than you do for similar goods and services? Let's see what we got. Oh, I don't know if I can be heard. Yes. Oh, you're near the top. All right. So if anybody charges more than you do, I would send them flowers. Thanks for being a great player in this industry. There are a lot of people who don't understand the value of what it is that we do, and you do, and I am glad and honored to play in this market area with you. Right? Thank goodness, because you're not the only one, but I know many, many contractors who are the highest priced provider of services in their area. But there's also a correlation between those guys and the heft and profitability of their company. In other words, the best, I don't want to say best is so relative. The owners who are enjoying the most success by their own yardstick are premium priced providers of premium services, even if they're small companies. But I don't know any really great companies who are the low price provider of premium services and manage to do anything that makes them happy. So there isn't an answer to your question. You get to decide, and that's what the leader decides. So after all those words, I'm going to tell you, I don't know what you should charge. I don't know how much you want. As a consultant, what I would do is just ask you those questions. What do you want? How much do you want? How much do you want to pay your guys? What does next year look like to you? What does 5 years look like to you? I mentioned my friend J.R. Richardson. He's got that $1 billion plan laid out year by year. He has budgets between now and 2050 to get there. And his imagination is what's allowing him and his team to have a game where the scorecard and the goals are clear. Then those individual decisions of how are we going to present our prices, what menu service would we use, what kind of tasks would we put together and bundle, what uniforms will we wear, what operating systems, how are we going to keep track of inventory and stock, what kind of marketing decisions could we make, should we update our logo? All of those things still need to be determined. But the scorecard and measuring where you are compared to where you want to be, well, that's part of the game and what we were addressing here today. I feel so terrible that our wonderful, thanks, Eric. I feel terrible that our wonderful guest, Deb, didn't make it to the end of the call. So why don't you give her a little love by shouting out a thanks to Deb. She can hear this on the recording. And then thanks to you. Any last question that I could tackle before we get off the call? Well, I think now is as good a time as any to say thank you, love you. Thanks, everyone, for attending the call today. I wish you love, peace, lots of money, and freedom. And hopefully today you made some kind of a commitment. All right? You can't whine. What's one thing you're going to do? Don't forget to go get the freebie right here. If you put your name, email address in there, you're going to get the financial quick check and the instructions. And there's also going to be more information about additional products that might be of service to you. And if they look great, go ahead and buy them. Why not? Okay, love you. Talk to you soon. And until then, make lots of money.